Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris, and as a continuation of yesterday, we will continue and look at price action at support and resistance SNR. But before we do that, two disclaimers to discuss quickly, and one of them states the fact that this live webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out if this webinar is suitable for you. And second of all, please note that trading for exchange and global financial markets in general is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so that was the disclaimers. Now we can move on. Just wanted to let you know that before we take a look at the charts, technical analysis, you can reach out to me, of course, through the chat and ask me if you're interested in a particular currency pair or financial instrument, CFD, commodity. Just reach out to me, and you can ask questions, of course, as well. If you're by any chance new to these webinars, Nanette and I have regular webinars. Of course, you can check out the schedule at education. Just go to admiralmarkets.com, click on education, Forex and CFD webinars, and you will be able to catch some of these webinars. Also, expert trading tips on a daily basis. All right, that's also included. Besides that, you'll find a lot of info. Just very quickly, you can, of course, find out more information about Admiral Markets. You can find out how to start trading, what kind of platforms, such as the Supreme Edition plugin that is extra, and products, what instruments you can trade. Plus, of course, Nanette and I are regularly updating analytics and education parts. All right, so that's a quick introduction to Admiral Markets, and now we'll be taking a look at the charts in just a second. I just wanted to take a look at the market heat map, if you don't mind. Bear with me there for 1 minute, because I want to take a look at what kind of big movers we have at this moment. You can see some of these or CFDs, right? Some of these stocks. Let's move a little bit lower though. There we go. Alrighty. I'm specifically interested in the currency ranges. Pound, as always, first. That's what I was kind of looking at. I noticed that the ranges were quite tight yesterday, and that's indeed true. You can see how that market heat map shows that. I think the market is loosening up a little bit at this moment, so we'll dive into the charts in just a second. But yesterday was a little bit of a range day, and I think that the dollar is breaking to the upside, and I do see some crosses as well, showing some movement, not in the directions that I was actually looking for, but I didn't trade as yet. I only traded dollar weakness at the beginning, but those went into a loss, and then I was waiting since then. But you can see that indeed the market was quite choppy. Just look at this range, and you'll see that that's quite useful info. But the market is showing some heat at the moment, so with no longer ado, let's take a look at the charts. I'm doing fine. Thanks, Angel. How are you? Everything okay? And Alexander, good to see you too. Are you guys in any trade setups at the moment? You're a cat? Sure. Angel's happy for dollar weakness. Yes, and that has the reason for that is connected to gold, the golden metal. Yes, indeed. All right, so let's take a look at Euro CAD. That will be on our list right after the majors. Euro dollar, pound dollar, dollar yen. There we go. Euro dollar is indeed pushing. So that is dollar strength. We take a look at the dollar index, and it is pushing too. All right, it is indeed going through the R1 and now pushing through that resistance, the last resistance level. Anyone who looked at my wave analysis, I tried to make it dramatic for saying this is the last kind of border for the dollar. But yesterday's bullish candle did give us a little bit of did already change the perspective did already change the chance. You know, obviously I was bearish on the dollar. One more lower low was my bias. Yesterday changed it to 50-50 because yes, it was a decent bullish candle, and now we're seemingly getting the break. So there is a good chance of follow through, I would say. Let's take a look at the euro dollar though. It's more useful than the dollar index, I think. And take a look at what's going on. There we go. Angel says Camarilla never lies. Yeah, you know, everyone has to trust their guns, isn't it? And then it says, and I trust my wave patterns, but yeah, in this case, the wave patterns didn't unfold exactly as I expected. I was definitely bullish because I expected a wave. You know, if not a wave 5, then at least a wave 2 here. Wave 1, wave 2 for downside, right? So that was the minimum I expected. But it looks like if this is bearishness now, which seems to be true, then I guess wave 1 is being pushed further down the road, more than I expected. And not sure how far wave 1 can go. We can put some fibs on this chart and see what the targets could be. Eventually, I do expect a wave 2 to occur, but that, in my opinion, would be a hook back for more downside now, or very likely considering this break at this moment. Right? So technically speaking, this could still be a wave C within wave 4, because if we put a fib from here to here, I know it's not as exciting, but a wave 4 could easily stop at a 50 fib too. All right, that's still possible, but it is becoming a little bit less likely. For price to be really 100% in the downtrend, we need price to break through S2 and the 50 fib. But as I said, it is becoming a little bit more likely that that's going on. This could still be an expanding wedge with a bigger, higher high and a lower low like this. But yeah, it is not as frequently not a frequent pattern that would happen, right? So what are the scenarios? Let's see. Today is Wednesday. We got 2 full trading days left. Today, half or less than half, I guess. Let's take a look at this daily chart, maybe. For me, I'm looking for this daily candle probably, right? So we need to see daily candle close near low, I guess. Because if this turns into a pin bar, that would not be good for bears. And yeah, we need to see, I would say, retracement tomorrow. So let's see. Retracement for tomorrow. This is a bit small daily candle, but let's say it closes a bit lower, like 121.50. A bit of retracement, and then it downs it to 121, maybe 120 is possible. So it should hook back, or it doesn't have to, but it could hook back to the broken area around 122, 122.50. So that's probably, I think I'm just, at this moment, I'm not going to trade this break as we speak, personally, now. But if we get a good daily candle, and we see on the hourly chart maybe something like this, it doesn't even have to be a big pattern, then that would be good for follow through to 121 and perhaps even down to 120. But today's daily candle close is, I think, still important, because if today's daily candle closes somewhere in here, I don't expect that, but let's say, then that's a big daily pin bar, and that would change kind of the dynamic. All right. For those that by any chance took shorts somewhere in here or here, I would probably just put the stop loss above S1 and above these tops. Because now price is making a lower low. I don't see any reason why it should go up that far. We can, yeah, that's what I would do at least. Let's see. Angel's saying that Angel's trading with SWAT and MACD. SWAT is my method based on moving averages, and he uses Camarilla with that. Great. Happy that that combination works so well. Yeah, the CAMACD is good because, or the Camarilla, sorry, is good because it's a very good supportive resistance tool, definitely. And then with the moving averages, you get a good trend. You get a good view on trends. So it's a good combination trend, and then you got supportive resistance. Makes sense. For those that don't have Camarilla, you can also use the, yeah, it's good for entries, Angel, indeed. Yeah, indeed. And for those that don't have Camarilla, you can use this this pivot point indicator from Admiral Markets too, of course. You can download that at the website. Just go for the MetaTrader Supreme Edition plugin, and you'll get access to these pivot points. And these pivot points, I have them on weekly, but you can use them on daily too, or monthly. All right, let's move on. Pound dollar broke already earlier. So this is something we discussed yesterday, this triangle, right? Break up or down or bounce. Those were the options. We did get a big pin bar. So anyone who's traded, I didn't trade the pound, but anyone who traded that pin bar got a little bit of a headache from that because it didn't bounce at all, actually. It still broke to the downside. And that can happen. That's a little bit difficult. I think the warning sign was when price broke through this trend line. A bit of a triangle like that. So that was pretty decisive, that break. And has been falling since. So nothing much to discuss at this moment. That was a breakout that happened in London session. Anyone who traded that break, maybe great job, I guess. If you know, depending on how you traded it, of course, exactly. But good attempt in any case to the downside, right, of the break. But this is something that is behind us at the moment. We did discuss the triangle yesterday, so maybe that analysis helped you in a, you know, in some ways. But we did get the bearish break of this triangle. So for the moment, price is heading. I think that the next target could be around S3, maybe the minus 272 target. Pound is looking even weaker than the euro dollar. So here too, the next step, as I said, this has already moved away from its breakout point. So I don't see any reason. To me, it doesn't make sense to trade it here right now with a fresh lower low and price already moving 140 pips in one direction. And if we then take into account the expected volatility and expected movement that price makes in one day, then it could fall another 20 pips, but that's not worth chasing, if you see what I mean. Better to wait for today's daily candle to close, or that's my opinion at least. Wait for today's daily candle to close. Look if the close is near the low. If it's something like it is right now, that's a massively bearish candle. So wait for, one thing I do is when you get a price action signal like that, put the fib on the chart like this, wait for a hook back to a relatively shallow fib like the 23.6, the 38 or 50 fib. Look on a smaller time frame like the 4 or 1 hour chart for a turn. You could also use weekly pivot points. You can also use Camarilla, of course, to assess where our confluence points within the day. Look for price action at those fibs, and that could be a short potential for a reversal, or not a reversal, but a continuation lower based on this dollar breakout. Now, considering the fact that euro pound is moving up, as we can see, right? Pound weakness might be better actually than euro weakness. Pound dollar short. Pound dollar downside might be better than euro dollar downside, if you see what I mean, because the euro pound is moving up this moment. But a good thing to keep an eye on would be the daily candles today on both these pairs. Excuse me. And let's see, excuse me, how far this dollar strength can last. Now, ironically, the dollar strength is not following through on the dollar yen. So yen is strengthening. It's a little bit funny, but that's what's happening happening at the moment. Sorry about that. Let me take a sip of water here. Alrighty. And we are seeing a break to the downside here on the dollar yen, or not a break as yet. We saw a break maybe of this 1 hour trend line. There we go, right? So that could have been a trade earlier today if you like that, perhaps. I mean, for me, I was still not, I was already in this trade, so I didn't rejoin it. But yes, it is trying to break through this weekly pivot point. So it depends on this 4-hour candle, which closes in 2 hours, 10 minutes. If the close is near low, this trend line will probably break too. With a candle like this, there's a good chance there will be a follow through. So there could be some pullback maybe to the weekly pivot point and a follow through to the S1. That could be a short to think about. But it depends on the breakout candle here, I think. Anyone who traded it before doing well could even use the current 4-hour high to move the stop loss. I myself didn't trade this though. To me, it seemed a little bit too choppy to re-enter at that point, especially with the dollar still hanging in the air. So I didn't. But I was in the short from about here last week, but I moved the trail stop loss to above these stops. Maybe too early, I'm not sure. I mean, it seemed like the best balance. I didn't want to stay in the trade too long, but I don't know, maybe a bit too early. I don't know, maybe. I think still probably made more sense to do that. But Aussie is trying to break. It definitely had a good bearish daily candle. And it did make the break pullback that we were talking about yesterday, as far as I remember at least. So the Aussie is also following the dollar strength. Might be good to take a look at pound out and euro out to see which one is stronger. We know that pound dollar is looking better than downside than euro dollar. So let's see pound out, for instance. Let me use a different template here. What could be better? And yeah, pound out is moving lower. Seems to be breaking this support. It was an uptrend, but it really failed to continue to the upside for the moment and looking bearish. So pound might be better than the Aussie. Pound is looking better than Kiwi at the moment with bearish price action, strong. Pound dollar short might look the best tomorrow. All right, let's take a look at some of those crosses. That's the dollar side of things, I guess. For the moment, I don't see any trades right here, but let me double check. Okay, I'll take a look at gold, definitely. Let me just finish maybe the review on some of these crosses, right? Euro yen is moving fast, so pound yen specifically. Pound yen broke to the downside, which yeah, I was still hanging in the air where that will break. As I said, I like the bullish bounce a bit more, but it is breaking to the downside. I said that I want to see a daily candle that could really break below this fractal, and that is what looks like will be happening today. We'll know a few hours from now, I guess 6 hours or so from now, if that is indeed true. But if it is kind of like that, pound yen would be a pretty good candidate for a short two. I would put a fib on this candle like that, and retracement right to about any of these fibs and continuation seems pretty good, I think, to me. Now today's low could be further down the, could be much further. We still have two candles that need to close before today's daily candle closes. That includes 2 hours in this 4 hour candle, another 4 hour candle. I'm not sure how far it could push. It could push, then bounce a little bit, so that today's daily candle has a low, who knows, maybe 146, 450, and the close around here. I don't know. We'll find out, as I said, 6 hours from now. But with such a candle, it looks very bearish. So that's something on my list for tomorrow too. With such a volatility, this breakout to the downside looking good. That's exactly what I was saying yesterday, is that on a daily chart, I want a candle like that personally. So that's what's happening. So next step in my vision, my plan would be a pullback to a shallow fib. It doesn't really have to go that far. I wouldn't expect more than 50 fib and continuation. We might not get that big of a bounce. It depends on how a 4 hour and 1 hour chart looks like tomorrow morning. I'll look at it before London Open. What I'll be looking for is how prices made this correction. We're going to look for a correction because price is falling quickly, made a lot of momentum. So it's going to be some type of correction. Now, what type of correction? Is it going to be a flag? If it's a bear flag, it might not go more than the 23.6 fib. If there's more zigzag, it could go to the 50. Bear flag could also go to 38.2. So far, I like pound yen, pound dollar tomorrow morning. Euro odd, Euro New Zealand seem not to be moving anywhere. Euro yen is moving down, but pound does look weaker at the moment. Pound dollar, pound yen look better at the moment. Can take a look at. We know that, let's see, Aussie is moving lower and Kiwi too, right? So pound. Let's see. What is better, pound odd or pound dollar? But Aussie is weaker, so dollar is stronger, so pound dollar is better. We know that dollar yen is moving, which means that yen is actually stronger. So pound yen might be the better one actually than pound dollar. Ooh, it's recently seems to be accelerating as we speak. That's sometimes annoying to see that happen if you're not in the trade, and as I said, you're basically, you see price at 147.40 and it still falls another 40 pips. But it's difficult to. I know that some traders do like to trade this kind of momentum continuations, and I'm sure there are strategies that are able to do that. But I'm more of a pattern trader, so I don't, let's say, chase these types of trades. Doesn't mean that you cannot be successful with that, though. It's just not something I'm doing. So for me, it's all about the daily candle and the pullback tomorrow morning. And now it's too late. I wasn't trading this break to the downside, but if I would have traded the downside, then for me, the breakout to trade would have been this trendline break with this candle. You don't see it, right? Or these candles. Those would have been the break. But as I said, I wasn't trading lower time frame breakouts to the downside here in this case. In retrospect, maybe I should have, but that was my analysis. So what can you do? But now, yes, open to, depending on today's daily candle close. So pound yen looking even better than pound dollar to me, but both are definitely an option. And that's basically it at this moment. Yeah, I just wanted to say it could be annoying, but better to stick to your edge, better to stick to your system, whatever that is, than get lured into taking trades that don't belong to your vision, right? Just because something looks good or something seems appealing or something seems like interesting. That's where things get tricky because you're not used to trading that way, and it could have It could have a bit difficult effect on you because then you go into the trade, but you're not sure how to handle it. Price goes against you, get a bit nervous. So it's better to stick like to your vision, better to stick to the setups your plan and your practice and your experience is kind of focused on. If you're focused on 15-minute momentum breakout continuations, right? Like here, great, go for it, right? If that's what your system is about. Take a look at dollar CAD. Yeah, we can take a look at that. I did look briefly. I'm a bit unsure about the dollar CAD to be honest with you because it is. And I will take a look at gold. And at Nasdaq, no problem, because it is, to me, not look. It is a little bit strange in the sense that I thought this would be a wave 3, but then we got divergence. So we did, and we had a little bit of a rising wedge pattern, but that pattern seems to be breaking right now. So that might not be a roll. I'm not too certain. Oh, EuroCAD too, I promised. So might as well connect EuroCAD to this dollar CAD, but dollar CAD, I was definitely bullish, and I even took upside trade in here, and I also took a downside trade in here because of the divergence, and I thought dollar weakness, so one win, one loss there. But I'm not too sure. It's still looking very, very choppy and corrective. This upside, I didn't at the beginning, but now it's trying to break, so that might change. Problem is resistance is pretty close by. Difficult one. I don't have any particular trade ideas with this as yet. Do you, Flavius? Which ideas? What kind of trade idea do you have with it? Is it bearish reversal at this target, or are you looking actually for follow through to the upside? You sent me an email. Sorry about that. You did. Sorry, I was really flooded with too many things today. Let me take a look. I missed that. Now I remember, Joe. I just didn't have time. It was a bit, as I said, a bit flooded today. Let's see. There are two scenarios. Wave 4 is over and wave 5 will begin. All right, that's what. Otherwise, the correction is not over. All right, so let me download these pictures. All righty, there we go. Wave 1, 2, yeah, it's definitely possible. That's what I was also thinking, indeed. This bullish, the start of the wave 3 is looking a little bit more corrective. That's my main issue at the moment. But if the dollar index is breaking, it could certainly happen. Or a wave E further down. Okay. Well, the ABC, it wouldn't be a wave E because a triangle would, would be different. A triangle would be like that. So it could be a downside, but it would be different. There would be some, maybe a 1, 2, 3, 4, 5 or something like that within the wave C still. Let's take a look at the monthly. But I agree that this formation does look like a 1, 2, 3, 4, 5. That I do agree with. And let's take a look at the monthly. And that this could be wave 4 as well, agree. And that this could be the start of wave 5, agree. It's just what I find confusing is that if this is a wave 1, 2, and this is the start of wave 3, it's not starting like a real wave 3. But sometimes wave 3s can start slow, and that is possible. It's just not ideal, but it's still possible. This was a pretty good start. This looked like a wave 1, 2, and up we go for a wave 3. That doesn't seem that likely anymore, but it could be a different wave count. It could be, and that's something I still need to see. This little piece here is a little bit awkward for wave 3, but what could be is that this is wave 1, 2, another wave 1, 2, and up it goes for wave 3. So that's why this break could still be an important one. So probably from that point of view, today's daily candle could be important. But if this is a wave 3 of wave 3, then bullishness should be very strong. If the dollar is breaking, the dollar CAD upside is looking probably better than the euro CAD because the euro CAD is euro dollar is moving down. Of course, the euro dollar might make a bullish retracement first before moving lower. So euro CAD might move up too. Last week was a pretty bearish candle. Not too sure. I would still rather wait. Dollar CAD could be okay as a breakout. Euro CAD, let's wait for the euro dollar, I would say. But if it does break through this resistance trend line, yes, bullish break could be on the table. We have Nasdaq on the list to look at. And yeah, it basically respected the previous top with a pretty bearish candle. So I would be careful with this. It might retrace deeper, personally, but maybe I'm too pessimistic. And gold, good bearish candle yesterday, good breakout candle. Let's renew this template. Looks like a bear flag indeed. Dollar index will be strong. I think indeed the dollar, there's a good chance that the dollar will be making its breakout. I think that there could be a significant dollar rally, not only the 21st of March, actually, now, if we get a good break. As the euro, I think that the euro dollar might make a 3 bigger wave move down. We can take a look at that in a second. Daily chart. Yeah, I'm not sure. It could be okay. It is making like a bear flag here, but the stop loss is a little bit tricky. Maybe above this top, above the weekly pivot point would be the better one, probably. But this correction could expand to the 50 fib and make like a bigger bear flag. That's one of the risks I think that is on the table here. I would probably rather wait for this flag to expand a little bit, but otherwise it could be a good bear flag for downside. Let's take a look at that euro dollar. Now that we're getting a break, there is a increasingly better chance that the euro dollar has completed 5 waves. Let me show you. Wave 1, 2, 3, 4, 5. This is something we've been talking about, of course, for a very long time. And once these 5 waves finish, there's a good chance of an ABC correction and then upside again. So the dollar strength would create this movement. So that could be a substantial dollar strength, in fact. It could be created by the potential, well, we see potential inflation, I guess, and therefore interest rates going up maybe in the US. Let's see. That could fuel it. We see basically a budget deficit being increased, so more money going back to in the form of taxes that might give a temporary short-term burst, a little bit of extra growth there to the economy, which would also add to the inflation potential upside. So which in turn would fuel the or increase the chance of a dollar interest rate. So there could be some demand for dollars, and that could deliver this kind of dollar strength. And why would the dollar then lose value again after this strength and the euro dollar go up? Well, that's something that we'll have to see. I'm sure there will be some fundamentals at that time that will explain why euro dollar will go up. But that's my wave analysis at this moment. 5 waves up, 3 waves down, 5 waves up. We'll have to see at that time what could explain that. But that's a little bit down the line because these 3 waves could take their time. That could easily be because look at this wave 5, right? That took a year, so you get the picture. Ultimately, I expected personally one more upside for wave 5 of 5, because within wave 5, it looked like a wave 1, 2, 3, 4, 5. Technically, that wave 4 is really only invalidated if price gets there, but that's quite far from here. The fact that it's breaking through this bottom is already a little bit a sign that this could happen. What downside could happen? We could put it from here to here. And basically, the wave A typically will, yikes, could easily go to the 23.6 fib at 120, right? That's the first target. And then it depends, like, are we going to get a bounce there, or is it just going to keep falling? But eventually, the 38.2 fib will be the next level to think about. Ultimately, after it finishes 3 waves, I wouldn't be surprised if it gets, 38.2 fib would be the minimum, but it could go even to 50 or 61.8 fib. Any of these three are the most likely bouncing spots. Yes, wave perspective on gold. 1 second. Alrighty, let's see. There we go. So expecting 5 waves up, then 3 waves down, like this. Well, let me do that with, not with the trend lines, but 1 second. So for the moment, it looks like wave 1, 2, 3, 4, 5, and an ABC like this to me. And then up. So, but yeah, for gold to go up, well, it would be, it would require maybe some recession as a hedge, that things are not going too well. We'll have to see what could drive the gold to the upside like that. Typically, of course, more bought in times of, for instance, in times of when the economy is not doing too well, because anyhow, interest rates do not provide much gain. Stock market doesn't provide much gain, so. And as you can see here, gold made a big dash during the Great Recession last time around. Great Recession unfolding 2007, 2008, and that's where gold more or less went from 600 up to 1900 until it topped about 2011. So that's, in the during the height, the peak of the Great Recession, that's where it really made it most games. It was already an uptrend, of course, before that, in all fairness, but still. All right, that's about it, folks, I guess. If you're interested in Keltner channel, the pivot points I just showed, but a lot of extra features. Once again, MetaTrader Supreme Edition, it's a plugin, extra plugin there from Admiral Markets. So you can download that for free. And more analytics then tonight, tomorrow, webinar tomorrow to check out Education, Forex, and CFD webinars, plus all of these info tabs here. For more info about starting trading, just click on Start Trading, pretty straightforward. And wish you all good trading. Thanks for being here. Hope it helped, and wish you good trading again, once again, and see you soon. Cheers.